Welcome. In this video, will ZBCN coin continue to decline? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When examining the chart, it is noticeable that the price has moved steadily upward for a certain period, following a pattern commonly seen in technical analysis known as an ascending trendline. This trend reflects a structurally rising channel formed by each successive low being higher than the previous one, along with gradually increasing highs. For investors, such a structure is a significant technical signal, indicating that buyers are in control and that a bullish sentiment dominates the market. However, markets do not move in the same direction indefinitely. Within a given time frame, when buying power starts to weaken, the price typically first loses upward momentum and then approaches the ascending trend line, which acts as a support. When the price touches this level, it may bounce and continue its upward movement, as it has in the past. But if the most recent touches show weak buying responses and declining volume, it signals that the ascending trend is weakening. A similar process has occurred in the structure analyzed here. This uptrend, which continued intact for a long time, eventually broke due to weakening buying pressure, increased profit-taking, and a shift in overall market sentiment. The price dipped below this ascending support line, producing a significant technical signal. Because ascending trend lines are not just visual constructs, they also represent psychological boundaries that define price direction. A break below this boundary shows that buyers are no longer able to respond adequately, and sellers are beginning to take control. Such breakdowns often result in sharp and noticeable price drops. When an uptrend breaks, not only is a technical structure invalidated, but investor expectations and psychological balance are also shaken. This breakdown causes many investors to close their positions, while it simultaneously triggers short sellers to enter the market, increasing selling pressure. As a result, the price loses its upward support and gains freedom to move downward. Especially when these breakdowns are supported by strong volume, they are considered confirmation of the move. This indicates that not only has the trendline been broken, but the market is also reacting seriously and starting to shift positions. In volume-backed breakdowns like this, the price typically moves quickly toward lower support levels. That's because the technical structures supporting upward momentum have disappeared, and the market begins searching for a new equilibrium level. Additionally, the psychological impacts of such breakdowns should not be overlooked. A long-standing uptrend builds a sense of confidence among investors. When that confidence is broken, many investors panic and close their positions at a loss, further increasing selling pressure. This is especially dangerous for leveraged traders. As positions approach their liquidation levels, cascading waves of selling can be triggered. In technical analysis, ascending trendline breaks are considered the beginning of trend reversals. These reversals may be limited to short-term corrections, or they may trigger larger and longer-term bearish scenarios. Therefore, investors should be cautious during such breakdowns and interpret price action accurately in conjunction with indicators. In conclusion, in the structure analyzed here, the price dipped below the ascending trendline it had followed for a long time, disrupting a critical technical structure. This breakdown is a clear sign that the market structure has changed and that sellers are starting to take control. The subsequent downward movement after the break clearly shows how strong this technical support had been and how sharp the reactions can be once it's broken. But we can't rely solely on trends for analysis. Let's take a look at other metrics as well. Stay tuned. When analyzing the current structure of the chart, it is clear that the price is moving at a very critical level. This technical level, which has acted as strong support against downward pressure many times in the past, is now being retested. This area stands out as a zone where buyers have historically stepped in with strength, preventing the price from falling further. In technical analysis, such levels are often referred to as support zones, and prices tend to stabilize in these areas. However, recent price movements indicate that this support is under significant threat, with the price repeatedly testing this level and now positioned very close to the boundary. The price is currently almost clinging to the support level, and there is anticipation around whether buyers will react. At this point, two technical scenarios come to the forefront. The first is that the price holds here and reacts upward, closing above the support zone and preserving it. The second, more negative scenario, is that the price dips below the support area, signaling a breakdown of this technical structure. On the other hand, if the price continues to stay below the support level and establishes permanence there, it would indicate a critical technical breakdown. Support zones are not just lines drawn from historical data. They also represent psychological comfort zones for buyers. If the price breaks below this comfort line, market psychology can also be damaged, potentially initiating a new wave of declines. This drop could impact not only technically, but also psychologically, influencing investor behavior. Many investors may panic, close their long positions, and selling pressure could intensify. That said, a break below a support zone doesn't always lead to a sustained decline. In some cases, the price briefly drops below the support but quickly recovers. Such movements are known in technical analysis as false breakouts. If the price quickly climbs back above the support level and closes there, it may indicate that buyers remain strong and that the downward move was just short-term manipulation. These false breakouts often result in a sharper upward reaction. Therefore, the current price zone is not just a technical threshold but also a psychological turning point. Whether buyers can hold this level strongly will largely determine the next phase. If the support is maintained and the price gains upward momentum here, it could mark the beginning of a new uptrend. However, if the price closes below this critical support line, the bearish scenario becomes inevitable. Another key element investors should pay attention to is trading volume. Whether it's a support breakdown or a bounce from support, the presence of high volume provides much stronger signals. If the price breaks the support with a noticeable increase in volume, it is a strong indication that the breakdown might be lasting. Conversely, a breakdown on low volume should be watched carefully, as such moves are often short-term traps. In summary, the price is currently positioned in a very sensitive and critical area. If buyers react strongly and the price moves back above this support level and stays there, a continuation of the upward movement is technically quite likely. However, if the price closes below this support line and buyers disappear, the bearish scenario takes over. Therefore, the short-term price action ahead will play a decisive role in both the future of the technical structure and the strategies of investors. The MACD indicator is one of the most reliable tools used by investors and technical analysts to measure market momentum, direction, and trend strength. This indicator consists of two main components: the MACD line, which is derived from the difference between two exponential moving averages, and the signal line, which is plotted on top of the MACD line. The interaction between these two lines provides strong clues about the direction of the price. In particular, the crossovers between these two lines can signal potential trend reversals. However, in the current analysis, there is no upward crossover between these two lines. On the contrary, the MACD line is below the signal line and is trending downward. This indicates a technically negative outlook. At present, the MACD line is clearly trending downward. This trend suggests that the market's current momentum is weak and that sellers still hold control. The continued position of the MACD line below the signal line indicates ongoing negative momentum and potentially a continued search for a new low. Especially if a noticeable gap has formed between the two lines and the distance between them is increasing, this serves as a strong signal that selling pressure may intensify and the price may continue to move downward. At this stage, investors are closely watching for a potential upward crossover in the MACD. Only with this crossover can the first technical signal be received indicating that the downtrend has weakened or may be ending. However, if the crossover has not yet occurred and the lines are still diverging, it suggests that the market has not yet reached a bottom and the downtrend may continue. This type of technical outlook requires greater caution, particularly in short-term trades, as there is still strong selling pressure in the market and any upward price movements may be short-lived. The downward trend in the MACD should not be evaluated in isolation. When combined with volume, RSI, moving averages, and price action near support and resistance zones, it provides much more accurate insights. For example, if the price is approaching an important support zone but the MACD is still showing bearish signals, the likelihood of a bounce from that support is weakened. Or if the RSI has entered the oversold zone but the MACD remains negative, it warns investors of potential false buy signals. Another important point is the status of the histogram bars. The MACD histogram reflects the difference between the two lines and helps detect changes in momentum early. If the histogram bars have turned negative and are growing, this indicates that the downtrend is gaining momentum. A series of consecutive negative histogram bars confirms that the trend is continuing downward and that a reversal is not likely in the near term. Moreover, the MACD line's failure to cross upward not only signals that the current downtrend will continue, but also shows that investor sentiment has not yet shifted. There may still be a prevailing risk-off sentiment in the market. This suggests that larger investors may still be staying out of the market or maintaining short positions. As a result, retail investors should avoid catching a falling knife. At this point, investors should remain patient and wait for a possible MACD reversal. When an upward crossover occurs and is supported by volume, it signals positive momentum. This becomes an important technical sign that a bottom formation may be taking shape and that the price could begin a recovery. However, if that signal has not yet materialized, it is much more reasonable to monitor the market and wait for more favorable signals rather than rushing into a buy. Furthermore, in some cases, the MACD line may approach the signal line but fail to gain sufficient momentum and turn downward again. This can lead to short-term misleading rallies known as dead cat bounces. In such situations, investors should make sure that a crossover has genuinely occurred and that it is backed by momentum. In technical analysis, indicators like MACD should never be used alone. However, based on the current technical outlook, it is clearly observable that the MACD has not made an upward crossover and remains in negative territory. This suggests that the downtrend is still intact and the price may continue to move lower. Such technical patterns help investors reassess their positions, set stop-loss levels more cautiously, and avoid aggressive buying decisions. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.